Hi everyone, this is Sampath Ram. Welcome to my channel. Thank you for stopping by. This is the second video in this series of market profile analysis and candlestick pattern analysis that I've just started last week. So today is November 12th. Without further ado, let's get right into what happened last week in the US stock market. As always, I stick to my analysis on S&P 500 futures, that is ticker symbol ES. So let's review what happened from last week onwards. So on the bottom here you are seeing the dates. So let's start from the November 4th, which was last Friday. So last Friday was a P profile price action, and in the overnight session we had gotten a strong rally and closed near, like market opened on Monday with a gap up, and so when you have a P profile and the high of the P profile breaks, you would get a squeeze, short squeeze we call it in the market profile view. So we had a short squeeze, we retested the overnight low, like we essentially had a counter auction and then bounced again and closed near where we opened on Monday. And then Tuesday, what happened? So if you notice, the Monday's profile was sort of like a B profile where all the distribution of volume was on the downside. So it's a strong buying. Then that happened on Monday. Then Tuesday. So I'm skipping one profile is because this current view is currently split between regular trading hours and overnight trading hours. If you notice, sometimes market gapping up or gapping down after prior day's price action, that's because of overnight action, and that's why I had separated out with a different profile for overnight specific trading zone. And the way I easily distinguish is based on the volumes. If you notice, the volume of overnight session is generally maybe 1/4 or 1/3 of the volume that happens on regular trading hours. As you can see in this example, the Monday's price action volume was 191, like it's 1.9 million contracts that were traded, and then in the overnight session, if you see, it's 434,000 contracts. It's like almost 1/4. So coming back to where we left off, so on Monday we had closed slightly where we were open, and then on Tuesday we again had a formation of a P profile in the overnight session with a high of exact matching with prior day's high, and then we again got a short squeeze. Oh, wait a second. Yeah, overnight high was matching. Like overnight high was matching on Monday, so we broke it and then closed right above with a single prints. And the following day we had repaired those weak references, the single prints, and then closed above. So in this process, we had formed like a 4-day balance. So last week when I had posted, it was like 2-day balance. And then since the value of the zones were overlapping, I made it as a 4-day balance. So 4-day balance low was 3704, balance high was 3821. So we repaired those weak references on Wednesday, I believe. And then on Thursday, we had these like breakdown. We came back within the balance zone and then closed near the low of the day, creating a spike. But then there were exact selling points, meaning if it was an actual breakout, and how do you say, if it is generally a balanced breakout, it would move very wild, but it hadn't moved that wild, although it broke out but then closed near where it opened. So the following day on Wednesday, we had entered the balance zone again, repaired. Actually nothing had to repair, just we closed near low of the day because we entered the balance. The target would be the other end of balance. However, we closed with a spike on that day. Again, many terms for you might be little not easy to comprehend, but I'm trying to explain what happened in an easy term so you can easily understand. So we broke the prior days, we broke the Wednesday's low and then closed near low of the day with a spike. Spike means like not enough time to retest the zone where we closed. And then on Thursday, pre-market we had a pretty solid even distribution. Then when the CPI numbers came, we had repaired all these weak references. That let me show you what a weak reference means. So let me expand the Wednesday's regular trading hours view. That's what I have expanded here. And if you notice, there is exact selling from opening of the 30-minute candle, like over here, and then they were open like right here. If you see, there is no print above the opening of this. That's again a weak reference. So people were selling exact references, which triggered this short squeeze move. So the numbers came out pretty good, meaning the inflation seemed to be reducing. So people kept on buying and triggering this short squeeze again, and we opened with like 100 points gap up, if you notice. And the reason I highlighted these in pink color is because those are the single prints trapped traders from the overnight session. So we had literally opened with almost from here 26 to 85 or 95, almost like 70 points gap up. We didn't fill the gap at all, and the following day, Thursday, we had bounced exactly from the single prints, because when people are trapped, they want to get out as soon as possible. Let's say if you're short and there's a big rally, you would want to exit your position as soon as it comes down, right? That's exactly what happened. So market open around this gap up level, then traded only like 10 points below the open, or maybe 20 points below the open, and then it bounced right from the single prints zone. And that's why I have marked this gap zone as gap high, and then the gap low would be this Wednesday's high. And then on Friday, same story. We had formed like a P profile, like a lot of shorts were there. A lot of shorts were there on that day trying to short this big rally, and then they got squeezed again and market closed right near the high. And on that process, we formed like a single prints, and that leads to the Friday's price action, which was yesterday, November 11th. And if you notice, we had opened again above the Friday's high with a small gap up. We had retested the settle, which essentially means clearing out all the inventory that was built up in the overnight session. And then we closed near the high of the day with a B profile. But what you need to notice here is low is poor and also high is poor. Poor means that if again people start from exact buying, exact selling from certain levels, you could see it in the market profile view very clearly. So when you have to enter with thousands of contracts into the market, it's literally impossible to get a fill at the exact level, because there have to be the opposite party as well to trade at that certain level. But if you are seeing these kind of nuances, like for example here, I've marked the low of Friday, which is yesterday's low, as poor low, because if you notice the first 1 hour's A and B periods candles, the 30-minute candles were exactly like maybe one tick apart. So that tells you that it's a weak hand buying. So people are still trying to cover the shorts at that time. And that's why you got this first poor low was formed. Then we got a very big rally after the initial balance high broke out. And then towards the end of the day, again, people started shorting from exact levels. And so we have got again another poor high on the top. So what could happen for next week is either we continue going up by with the break of Friday's high, that is 4009.5, and then retest this prior single print zone from like September. Again, same story like what happened this week. We had a similar big drop down in the month of September, if you notice here. So this is the overnight session, and then CPI numbers or some numbers came, then we opened up with a big gap down. So we have to see whether we will break the poor high or poor low. Just trade accordingly, and within that Friday zone, it's going to be choppy. choppy in the sense like it will move up and down with until the break of poor high or poor low happens. Just option selling would be the best bet. Option selling is like you can sell the options above the poor high and then below the poor low and make it like an iron condor strategy. If you want to know more about different option strategies, I've made some videos about it, like advanced option strategies. I will share the link in the description. Please feel free to check out. So that's about it for the market profile view. So two main key levels that you need to keep an eye on are the poor high 4009.5 for the upside, and then for the downside it would be 3951. So those are the two main levels that you need to look out for. So let's go to the candlestick view now. Again, let's start with the top-down approach of monthly chart. Since the Friday's close was pretty bullish and above prior weeks, actually prior month's high, we closed above prior month's high, but the month hasn't done yet. This is just, we are in the second week of this month. So monthly looks bullish, like we are trading above the prior month's high. And then let's go to weekly. Weekly would be, so weekly is also bullish. So last week, as you notice, we looked below the prior week's low. We closed within the prior week's range, so that targeted the other end of the balance. So we broke that prior week's high and closed above prior week's high. So weekly is also bullish. Then daily, let's check the daily. Daily, of course, is also pretty bullish, right? We closed above prior day's high, so the trend is up. Daily as well. So that's about it, guys. I hope this video helps you. If it does, please leave a thumbs up and stay tuned by subscribing to my channel. And don't forget to check out my other videos in this playlist. I keep posting them every week, so this is just the second week, and I'll keep posting. And I hope these videos helps you in becoming a better trader or understanding what's happening in the market, and thereby you can take better judgment of what kind of trades you need to enter and exit, or manage what you already have. With that being said, thank you again for watching and have a nice one. Bye bye.